Hi guys, it's Marissa Schultz here, author of The Rise High Investor. I'm a big property investor fan. I've been investing in property since I was 18 years old, and I've seen firsthand how property investment can allow you to have the wealth, financial stability, and financial freedom that you dream of. So I've decided to bring to you these short, regular videos that hopefully will empower you to achieve your investment goals and everything that you dream of. So today I wanted to address the question property versus shares. Obviously it's a, time old debate. People have been asking what's better for decades, hundreds of years. So today I'm going to give you my opinion on the matter. So I am quite biased. I do love property, and I would always choose property over shares. And I thought I might share with you some of my reasons for this. I believe that over the long term, property to me is perceived to be lower risk. I do like the fact that it's a lot less volatile from day to day, week to week, month to month than shares. I don't like the fact with shares that the values can change instantly or overnight. That does concern me. So I do like the fact that property is a bit slower and it is much more stable over the short to medium term, but you still get the good growth over the long term. So that's one of the factors. Secondly, I love the fact that property investment is low maintenance. I'm a little bit of a lazy investor. I do like the fact that I can just hand my properties over to my property manager and I can get on with living my life, and I don't really have to monitor them on a daily or weekly basis. I can leave that job to the property manager. So I really, really love that fact about property investment. Whereas I feel like to be a successful share investor, you do need to be quite up to date with the latest news of the companies that you're investing in, and you do really need to have a handle on what's happening in the market space and in the industry on an ongoing basis. I think especially in today's time where technology is changing so rapidly and things are changing so rapidly, you can't just rest on the fact that a company will be around for 40, 50 years, because that's not necessarily the reality. So I do like the fact that property investment is a little bit lower maintenance. I also think property investment is very, very easy to understand. And if you really want to understand and just have it simplified for you, then you really need to get a copy of this book. But it is very easy to understand, very easy to implement, and anyone can really do it. I love the fact that you're in control as a property investor. So as a property investor, you can make all the calls about what happens to your house and your piece of dirt. You can decide whether to paint it pink or put an extra room on it, or whatever you want to do with it. You can decide who lives in there. You can decide who the tenants are. As a shareholder, you really do not control your investment. It's the directors of the company that control your investment. And generally you don't know who they are or what they're about, and whether they're making good decisions and whether they're making the decisions based on you specifically in mind. So I am a little bit of a control freak, so I do enjoy the extra control element that I do get as a property investor. Obviously, there's also some really good negative gearing tax benefits as a property investor, but I always say that you shouldn't be investing just for the tax benefits. The property investment needs to make sense without the tax benefits, and the tax benefits are a bonus. But the biggest reason why I love property and why I would choose property any day over shares is the leverage. So basically, leverage is the ability to use other people's money to help you to achieve your goals. So the thing about property investment is that it gives you the biggest leverage. Banks understand property investment. Property's been growing in value forever. So banks are comfortable to lend a higher percentage of the value of the property than what they are willing to lend against other investment vehicles like shares. That means that you get to use more of the bank's money and less of your money, and it means that the money that you've got to invest stretches further. For example, if you had $100,000 of your own savings to invest, if you did actually get a margin loan, you might be able to get maybe $250,000 worth of shares potentially. But if you're willing to borrow money against an investment property, you could buy a property value between 400 and 600,000. Now, obviously, you've invested the same amount of your own money, but because the asset that you've purchased has a much higher base, you're going to be earning a lot more wealth, and the wealth is going to be growing at a much higher rate over the long term. So I think the power of leverage is really important and one that can't be ignored. Also, there's no margin calls with property investment loans, which is fantastic. And I think that leverage is a real winner when it comes to, promoting property investment over shares. So I did, there was a thing, I am biased. I do love property investment, but saying that, shares definitely has its merits as well. And I'm definitely not anti-shares. I think the truth is that every investment vehicle does have its pros and cons. There is no one size fits all. You need to find the right investment vehicle for you. And basically, in a nutshell, just find an investment vehicle that works for you and invest, because you need to take control of your financial future. So if you take nothing else from this video, please go out and do something that will make your financial future a lot brighter.